All right, guys. Can you guys see okay? If you can, just say something in the chat box and I'll get started. Hmm. Can you guys see the live feed? If you guys can. Okay. I just want to get started. Military time around here. I want to be pretty prompt. I want to get this thing kind of recorded within 30 minutes. So if you guys have any questions, feel free to drop it in there. A couple housekeeping notes. I'm not a financial advisor, so this is for entertainment purposes. Joe, we'll talk about tankers in a little bit. But yeah, this is for entertainment purposes. So, watch this at your own risk. Quick comment for the month of March, the people that have been following me on Discord would have known that I had a monstrous month. So because of that, I want to give the lucky winner for March giveaway. So whoever comments on my videos in March, I'm going to select one person from the comments in March and give $100 to. So I'm not going to talk about it too much, but the winner for March will get $100. So I'll either PayPal you or Venmo you, whatever suits you. So I'll pick that probably next week at the end of the month. A couple other things for the giveaway winner. Before I was just giving the prize to whoever comments, but if you're an idiot and you're making an obscene comment or a rude comment, I'll probably pick someone else. So keep that in mind if you decide to put a stupid comment in my feeds. Overall, the markets, S&P 500 is at an all-time high. So I'm still very bullish the markets. So you can see 1 year chart, it's right at all-time highs. 5 year chart, all-time highs. So when people talk about how the markets are crashing, I think it's really twofold. I think there's a lot of speculative companies that are struggling, and companies with high multiples, companies with no revenues. I'm still super bullish the markets. I think after this 1.9 trillion makes its way through the system, all you're hearing about now is an infrastructure bill. So I think if you're investing in high quality companies, there's probably nothing for you to worry about. If you are, sorry, I gotta lock my door. Yes, we'll talk about the canal blockage too. But if you're in the companies that don't make any money, have to continue to raise equity, you're going to be in trouble. And one good example, if you follow and see what happened on Friday, there was a guy named Bill Hwang. He was a Korean trader that essentially took $200 million, leveraged 5 times, got up above 15 to 20 billion in his own portfolio. And if you saw on Friday, all these weird companies like Valcom, Discovery, they sold off 40%. And the main reason is because Bill Hwang and Tiger Club, they had a margin call. And when you're super leveraged like that, you can't afford to have anything happen to any of your stocks. If so, it creates a problem. So Goldman Sachs, Morgan Stanley saw huge blocks of trades on Friday. So you could Google this yourself on the screen, but it's Bill Hwang. This is the cause for why these stocks has dropped 50%. And I think there's a lot of other names out there. You know, one example, I know people really love Kathy and ARK Invest, but they could face some of the same problems because they're very concentrated in the same sectors in tech. And if there's any outflows in those areas, you're going to have problems. So I would be very careful to be in companies that are highly leveraged or trading at high multiples, because when these things fall, they fall fast. So that's my overall thoughts on the overall markets. I know people keep asking me why I keep making these bear videos on Lordstown, ChargePoint, Fubo TV, and why I'm not spending a lot of time talking about new stock ideas. And I'll talk about that later too, about a company I really like and started building a position. It's Ouster. And I haven't made a video on that because SPACs are falling out of favor. And although I have a small position, I don't want to put any videos out there for you guys where it's risky, and it could cause you guys to lose money in the short term. So, so with that, let me see. I'm looking through some of your comments. So I'm going to talk about each of the companies that I own. If you have any questions, I think, like I said, Bruno's asking about Playboy CEO. I'm going to start with, you know, probably my biggest position at this point in time, and that's Playboy. This is a company, if you've been following, really liked this company when it was a little bit over $10, and really was a big fan of the fact that it was a low downside. And of all the SPACs out there were probably 2 SPACs that actually made money, like actual net income. And that was Playboy, which made a couple $1 million in Q3. And then another company, UWMC, I think. It's that mortgage company. And outside of that, even MP Materials didn't make net income positive. So Playboy was a company we really liked for the low downside. And as you can see, this stock has really kind of taken off after it merged. I think it merged when it was about $12, and it slowly went up to $15 to $16. And a ton of my friends actually sold out at $15 to $16. It pulled back, and it's taken off. And I think when they had their earnings call, it got above $20 per share. Now it's pulled back a little bit to 18. And I recently made a video on this one, and I'm actually more bullish Playboy than I was when I got in at 1060, mostly because, you know, NFTs was a new thing that Ben Cohen talked about in the call. And if you've been watching, I mean, I was looking, Playboy has like 5,000 magazine covers. So if they sell each NFT for 20,000 or 30,000, I mean, it's going to go crazy. And what's cool about Playboy is if you're following Playboy, I'll link it to this video below so you can look at it afterwards. But there is a guy who started a Playboy Discord chat, and that Discord chat is actually free. So you just need to know what the links are. And what's really cool is that this link or this Discord, this guy invited Ben to the Discord. So when you see BK, that's Ben. So it's actually pretty cool that we have access to talk to Ben. And Ben is super, super active. I mean, there's people out there saying, you know, they can't get their clothes shipped to Portugal, and he is looking to find ways to help make this happen. So yeah, if you guys want to talk to him, you can join this Playboy Discord, which is completely free. I think Bruno is going to offer the link. But you know, Ben's been saying at the Roth conference that he sees the brand alone to be a couple $1 billion, and the company is trading at $600-700 million. So I think there's a lot of potential. I think, as I mentioned in my video, the company is about 1 year ahead of its revenue projections, and this is without counting for stuff like the NFTs. So is there any other questions on Playboy? I'm just optimistic about this company. I think the licensing revenues are super great. There's people out there saying that this could be a $3 to $5 billion company. So yes, Bruno's right. They have $400 million of licensing. So the part about licensing is that it limits your downside, right? So Playboy has $400 million of licensing already done, which doesn't include renewals. It doesn't include new licensing deals. So this is money that they're guaranteed to get. The problem with licensing, though, is they'll tell you, Playboy will tell you, Ben will tell you that they have $1 billion in China. And for that $1 billion of sales in China, because of licensing, they're only getting like 4 to 6 cents on every dollar because of licensing. So I think as they start to make more products, see, I'm wearing my Playboy shirt I just bought just to support the stock. It's a little overpriced, I would say, but I am supporting the stock. And yeah, I see good things for it. So this is one of those examples where I liked it at a low price. Now that it's higher, I like it even more. So that is, yep, Bruno's right, only 40 million. And I think in the US, so a lot of people like to hear companies where they're like really big, right? For me, the fact that they're only 100 million in the US, to me, is something I really like, because that tells me there's so much opportunity, right? They're building in China, they're going into India, And then for the US, they're 100 million. So I went back and looked. They've had collabs with Supreme a couple years ago, sold out immediately. They had a collab with Steve Aoki in January, sold out immediately. And I see Billie Eilish, she's wearing Playboy clothes too. So there's a lot of room in the US to grow. So I'm pretty optimistic the stock. I don't see myself selling anytime soon. And I'll leave it at that. So let me close the Discord. So that's my thoughts on Playboy. I can figure out how to close this thing. Okay, maybe it doesn't want me to close. There. Sorry, I don't know what's going on. Okay. Okay, so the next stock I am going to talk about is hey, thank you, JB, once again. The next stock I am going to talk about is ILATF, and this is trading at VXTR on the Canada Exchange. This specific stock, I don't want to talk too much about where I got this idea for specific reasons I don't want to get into. But this is a company that I had, it was brought to my attention, and I thought it was interesting, and I really just didn't know enough about the company. And if you go and look for information about this company, there's so little stuff out there. And sometimes you just have to go out there and find out more information on your own. So that's how I reached out to Gary, who is the CEO of Voxter, to kind of understand more about the company. So I ended up having like an hour and a half discussion with Gary, and I didn't put everything we talked about because some of the stuff, we didn't want to make public, but I thought I left a pretty good amount in there. And okay, someone might have given away where the clues are, but this company is one of those companies where it's a penny stock. So I tell people, don't be stupid. It's a penny stock. So for me, a core position is between 5 to 10% of my portfolio. I have this below that. So be really careful. It's a penny stock. So although there are people out there saying that it's going to be a 20x or 30x in a couple of years, the CEO himself, Gary, told me he thinks by end of the year he wants to go NASDAQ. By then, it's going to be worth $5 to $6 Canadian. So I know it's really easy for people to get excited thinking, hey, I'm going to 5x, 6x, 7x my money by the end of the year. But please keep in mind that this is a penny stock. But with penny stocks, the main reason I'm invested in this is because, one, I'm riding on the jockey. So Gary is a pretty critical point in this company. And Gary, he's done this before. So he's done this at 2 other companies, kind of in the same field. And I'm riding on him. And then also kind of his visions of what he's doing. And if it was just Gary himself, he's getting up there a little bit in age. So I would be a little bit more concerned. But just the fact that he's merged with this other company called Albertelli, and there's another person who can take over as potential CEO to kind of execute these plans, I'm pretty hopeful for this company. But again, it's a penny stock. And although I see good things for it, you got to keep in mind what that is. But in terms of projections, I like to sit around and see what happens to the stock. What I like to see with companies is they got to show me something, show me revenues. So there's a lot of projections out there saying they're going to hit $80 million this year in revenues, which is up from 20 million last year. And let me see what comments. No, this is considered one of my smaller holdings. My biggest position right now is Playboy, mostly because I put in, close to 10% of my portfolio, and it's up 70, 80%. So that's the story with Voxter. There's really not much to say. They're doing a bunch of acquisitions. They made 3 acquisitions last year. They have $35 million with the recent private placement. So they're planning to go out there and do a couple more acquisitions. So really, it's penny stock. You can only extrapolate so much from it. I like to see what it does. Does it come through and produce numbers? And I know people are asking about when they're going to produce Q4 numbers. And when they're trading OTC, there's no requirement to produce to you financial statements. So that's another risk with investing in OTC companies. They can tell you pretty much whatever they want. and there's no requirements for an audit, and there's no requirements for anything. So keep that in mind. This company wants to go NASDAQ, so I suspect that they have probably a pretty good auditors, but don't know. So this one, don't be stupid. Keep a reasonable amount in this company. Let's see what other. Okay. And then the next company I want to talk about is AYR Strategies. And this is a company I first started talking about when it was 21, because it was an up-and-coming cannabis company. And the other reason I really liked this was I knew cannabis might be a big thing coming into the elections, as well as the left taking control of the government. So whether you like that or not, that's irrelevant. But there is going to be a push more toward legalization of cannabis just across the US. And I found this company by scanning through a list of probably 20 plus cannabis companies, and found the companies that had highest margins, because I like to focus on companies that have high margins. And this one had the second highest margins in the business. So it was a company that, not like Tilray, where it's negative gross margins. This company is pretty profitable. I listened to a couple CEO interviews, and all he talked about was profit margins and how he mapped out 12 areas in the US where profits could be high. So for example, if you go to Colorado, bad state to be in because cannabis is everywhere. Come to California, bad state to be in because there's cannabis everywhere. So he was very focused on strategic acquisitions in different states. So this stock ran up pretty quickly, up to about 29. And in December, they announced they are entering into acquisitions for 2 more states. So this is another example where I liked it more at 29 than I did at 21, because now they're entering 2 more states. So by the end of 2021, they are going to be in a total of 7 states. And you're going to be surprised. By the time we get to 2022, management and a couple analysts have this company projected to make about $700 million of revenues. So there's this topic about being, top tier MSOS, and I think AYR is going to surprise a lot of people and become top tier by the end of 2022. And, hold on, my kids are in at the door. Go outside. Go outside. Sorry for that. So even if you compare AYR, they got the second best margins. They're one of the only ones growing at over 100% growth. They'll be in 7 states, and some of the new states they're into are New Jersey, Florida, which is a huge medical state, and they recently closed a deal for Arizona. So they're very promising. I think there's a lot of cannabis names out there that people really like, the Tilrays, I think Sundial. You just compare the numbers, and I think AYR is going to outperform them. And even if you look at comparable numbers across different, just their peers, this is a $60 stock just to be comparable. And what I like about it is no one really talks about it. I've seen a few articles about it, but there's very little info on there. So that's, this stock got up to 35, and I think it's recently dropped a couple percent down to, let's see, in the last couple of days. Yeah, down to 28. Nothing's changed with this company. And if this company gets to, so the way I look at it is it got to 35. 30, I think, is a great price. And what I like to do is not just buy the dip. I like to buy on crashes. So I think about what a good price is, and I would say 30 is a good price. But yeah, if I could get to like 26, 27, I would consider doubling my position. So right now it's about 3%, 4% of my portfolio, but I'm looking to potentially double if we can get a little bit more decrease in the stock. Bruno's right. There are other companies. I think for a while they were in the process of merging with Liberty Health. And if you actually bought Liberty Health instead of buying AYR, there was a arbitrage opportunity where if the deal went through, you would have made money. You would have got an upside to that. So I know a lot of people bought Liberty Health, and that closed the arbitrage. So it's also not a bad idea to look for the companies they're merging with. I don't think all the companies they're merging with are always public, but that's something you can look into. I'm just kind of holding my shares. As you guys know, I'm pretty much a long-term investor. I just kind of hold my stuff. I don't really trade in and out too much. And that's what works for me. And that's what I found to be successful for me. But yeah, I have a certain part of my portfolio that you'll hear me in the Discord talk about how I'm YOLOing this, I'm YOLOing that. But that's a small portion of my portfolio, just to kind of give me something to do. But the core positions, I don't change them too much. I'll try to answer some of these questions at the end in regards to specific companies. Sonos is a company that we got into about a year ago, June, at about 13, and it's just continued to rise. It was kind of a COVID, all the products are sold out, new products are good. I saw that it had 10 plus years of revenue growth, and it was at that point where it was about to turn positive. And we had a couple bad earnings reports because they had to lay off a bunch of people. And this company, I would say, is kind of like fairly valued at 37 to 40. I think it's a good price. The only reason I'm not selling out, even though I'm up 200%, I think some of these COVID plays where things were sold out during COVID might see a crash soon. Sonos is one of those, Zoom, Peloton. But the main reason I'm holding out for Sonos is because, last year they decided to sue Google for copying them on connected speakers, because Sonos says they've been using connected speakers for the last 10 years. And yeah, so they had this lawsuit going with Google, and they said, hey, they're a small company. They don't have enough money to sue Google and Amazon. But if they beat Google in this lawsuit, then they're going to go after Amazon. So for a company that is $4 billion, I mean, these patent lawsuits could be multi-billion dollars. So that's the only reason I'm holding on to the stock. Would I open a position in Sonos at 37.40? I wouldn't. But if you got in early, like when we did in the beginning, around 13, yeah, it's fine to keep holding on that. Let's see what else I got here. All right, here we go. So here are Sting and TK. Sting is a company that, this one's a funny one. So before COVID started, like in January of 2020, the stock was $40 a share. And there's all this talk about super cycle coming to the oil tanker markets. And when COVID hit, every stock just sold off, right? So when I first got into Scorpio, it was like $14.50, down from 40. So this was like a multi-year low. And I thought, okay, COVID will be over in like 2 months and we'll get back to business. Unfortunately, COVID came. These tanker companies like Scorpio got huge rates. The stock went up to 25. I was up like 70% in like a month from March to April. And then COVID ended, destocking happened. This went down all the way down to $8. And throughout this whole time, I really didn't do anything. I didn't really understand why it would get down that low, but nothing's really changed. And I just kept holding on to it. And when it got to about $13, I bought a little bit more. So now my average cost is around 14. So yeah, it's 20 now. And I think there's a lot of optimism about, so the COVID lasts longer than everyone thought. But I think what's shocking to a lot of people is that COVID now is going away a lot faster than people thought. So I think on optimism alone, this Sting has been running up. The president of Scorpio is also getting excited too. I saw that he was, last year buying options that are $12.50 strikes, $10 strikes, $15 strikes. Now he just bought a bunch of $20 and $25 strikes. So he's optimistic. He was in a recent interview recently saying that it's going to run up to 25 pretty quickly and then to 40 shortly. So this is a stock that I now have long-term capital gains, so it's not going to go anywhere. And we're seeing rates for product tankers slowly creep up. We're seeing oil demand in the US pretty close to pre-COVID, China above pre-COVID. So I think it's looking a little bit more optimistic. And I think you guys have been watching this news on the Suez Canal. This will, depending on what happens today, I think today is a big day. There's on Monday, there's 18 inches higher high tide. So if they don't get this thing out within the next 24 hours, the earliest is going to be is probably middle of April. And then there's also talks about if they're going to take containers off, then this could be a multi-week situation. So this short term would definitely be bearish, not bearish, bullish for tankers, because now that people have to go around the Cape of Africa, it'll take longer. And anything that disrupts global shipping is good for all tankers in general. And the other thing I would say is that if you've been following kind of the supply chain and container ships are on fire. And for a while, all the shipyards in Korea, China, they were pretty idle, but now they're filled up with a bunch of container ship orders. So even if a lot of these oil tankers get old and get scrapped, if they want to order, they also have to fight the companies that are making orders for container ships. So that's another bullish scenario for a company like Scorpio, who already has a large fleet, doesn't need to go out and buy any new ships. And I think this company is well posed to do well. Like I said, it was 40 before COVID. So for me personally, I probably wouldn't even consider selling the stock till 60 or more. And again, you want to get out before the end of this next cycle, but I've held this over a year already. And yeah, I probably won't get out anything under 60. That's kind of where I currently see it. Of course, anything can happen. We can get another variant in COVID, and because of that, then things might change. Delay scrapping, that's possible, but the problem is inflation is also coming. So in the last 6 months, steel prices have gone up over 50%. So for the companies that have very old boats, yeah, if you can get more and more for your old boats, why wouldn't you scrap? So Scorpio is kind of my play for big, super cycle play where they have over 100 ships, high rates, they'll do well. You look at a company like TK. This is an undervalued company with a bunch of old ships. And a company like TK, they do really well, and they get really impacted by steel prices because their ships are closer to scrapping. So TK is also seeing a decent increase just because steel prices are going up. And this stock is actually really cheap to the point where if they just scrap all their boats, you get pretty close to where its current stock price is. So anything they make on top of that is just bonus. So TK and Scorpio, they're completely different markets. For Scorpio, they're kind of like the big bad product tankers. And for TK, it's more of a, value kind of play. So they're different. And I think management has net asset value for the company a lot higher than 15, I think in the 20s or low 30s. I don't remember the exact number. So TK, anything they make on the seas will be a benefit. And the other thing too, if you've kind of been following the rates just in the last couple of weeks, the smaller ships that are not the VLCCs, they're all doing a lot better in rates. So the rates are slowly picking up. And I like to really see what happens with TK next week if the Suez Canal thing lasts longer, because I think any turbulence in the markets will be good for everybody. And I think Tim Bowie, I think he's partially right. I live in California, which was hard hit by COVID in January. And by, just last week and this week, you go out there and traffic's back already. And I think we're making COVID vaccines available for everybody in April. So I think if we can get Europe back up, I think Europe's having a couple cases of COVID, causing a couple lockdowns. But if we can get Europe to kind of cooperate, I think oil demand is going to come back a lot quicker than anyone thinks. So that's going to be very positive for all tankers. And you're starting to see that with all the tanker companies that we're in. I think one person mentioned about NAT. And yes, NAT is the one company that, if you remember last year, all the retail investors piled into. And I know a lot of people got in there. This doesn't really show it, but a lot of people got into NAT at $6, $7, and it got as high as $9. And the problem with NAT is, if you go look up NAT, what do they own? They own Suezmaxes. So when you hear something about the Suez Canal, it gets people excited. It gets people thinking about Suezmaxes. So yeah, kind of in typical fashion, the companies that are the crappiest in the sector seem to be the ones that retail likes the best. So I wasn't surprised on Friday where all the other companies went up a couple percentage. NAT went up the most. But you can look, NAT is still down huge from where they were when retail investors were in there. at above 6. And this is a company that, yeah, they'll do okay if there is a super cycle. But I wouldn't bank on NAT. I mean, you have the companies that I really like: Scorpio Tankers, TK, even Euronav, and DHT. They're much better companies. There's no reason to invest in NAT unless you're in there for like a quick gamble, or you're in it hoping that there's going to be another pump. But I'm trying to be nice. But the management team is always a little suspect with NAT. But like I said, if we get a good super cycle, a rising tide lifts all boats. So NAT will get a piece of that. But NAT to be priced, at some points the market cap was bigger than some of the other names. It really didn't make a lot of sense. And yeah, I don't really have too many good things to say about NAT. I think a lot of people that follow the industry very closely would tell you NAT is probably one of the worst tanker companies. Frontline is a decent company. I think if you have Euronav, or you don't necessarily need to have Frontline. I think Frontline's an okay company. I wouldn't say they're as good as like Euronav or DHT, but they're much, much better than NAT. That's just my opinion. So if you're holding NAT, good luck to you. I don't have any other thoughts on that. Let's see. So the next company I want to talk about is Ouster. And this is a company that is in the Lidar space. So I first bought this company about 1% when it was 15. And as this company dropped down to $11.60, I bought more. So now I'm 2% in. And this company has continued to drop after its SPAC merger. And in my opinion, wait, what happened to my camera? Oh, is my camera off? Let's see. Did my camera go off? I have no idea. Okay, so thanks, Kim. So this company is a Lidar play, and supposedly from what management says, sound is off too. Okay. What the heck? Okay. I'm like a newbie with this camera gear here. Let's try it one more time. Okay, if this camera stops working, then I will use my other camera. Okay, I'll just switch my camera. All right, I'm using my camera on my laptop since the other one's not cooperating. Okay, I think we're back. So, is it back, camera and sound? Okay, so Ouster was a company I really wanted to make a video on, but after what we're seeing in kind of the SPAC markets, I just didn't think it was right to put out this video. Like I said, I'm down like, let's see, my average cost is $13.50, so I'm down like maybe 30 to 40%. I think this company has huge potential. They're in the Lidar space. The problem with a lot of SPACs is 2004, they always have projections about 2024, 2025, they're going to make money, but you really don't know. So I really wanted to go and do more digging, and the stock just keeps dropping. And because they're a SPAC merged company, I feel like none of the SPACs now, they're completely out of favor. So if you look at just the last week, I remember like Thursday, I saw 10 new SPACs, and all 10 SPACs immediately traded below 10. So, it's kind of funny. For a while, SPACs trade up immediately to 15, but now all the SPACs are trading immediately below. So Ouster is a company that is in the Lidar space, and What's different about them is that 85% of what they're doing is not for the automaker, not for cars. So while everyone else is focused on cars and autonomous driving, Ouster is planning to do 85% of their business on non-cars. So they're winning a lot of contracts. 85%. So 85% of their contracts are not going to be cars, and they're just picking up contract after contract after contract. So for this company that's worth like $1.5 billion, you compare it to like the biggest player in the Lidar space, which is like 88 Lumineer, which is about $8 billion. They have pretty much the same amount of revenues. So you got two companies that are same amount of revenues, one company trading at 1/5 its amount, and it's also diversifying. And they're also supposedly in a tech that is digital, so it's digital versus analog. So it's really hard for me as a accountant to really understand technology. But from what I understand, digital is supposed to be better than analog. Whether that's true or not, I'm not sure yet. So with Ouster, I have like a 1.5% position, which was initially 2. I want to see kind of what they do in the next quarter or the quarter after. So it's currently a small position. I think when I'm ready to make it a full position, I'll make a better video about it. I think right now it's just a bunch of claims, and just claims alone, I don't feel comfortable enough to just make it an official stock I talk about on my channel and have you guys track me to it. Because like I said, every stock I talk about that I really like, I'm going to track it for a period of 2 years and show you guys how it's going to beat the market. So I have a spreadsheet I'm using. So anytime I talk about a stock, I throw it on there and I'm tracking it against that. So whether I sell it myself in my personal portfolio or not, I will track that. And mirror stack, I talked about Voxter already. So when I finish this video, you could probably, when I upload it, you could kind of go back and there's a little blurb on Voxter. So the last stock, I think, actually 2 more stocks I want to talk about. One is Capri. This is one of those companies, they own Versace, Jimmy Choo's, and Michael Kors. And I'm up like 100% of the stock. It's a small position. I don't really even, this is more just luck or anything. I know Michael Burry was talking about buying Coty, C-O-T-Y, which is a bunch of luxury brands. And I started looking into luxury brands. I like Capri better. But again, when COVID happened, for some odd reason, these high-end brands, the brands that sell $5,000 shoes, didn't really see a downturn. And as they increased their prices 5%, 10% on their high-end shoes, they didn't see a downturn at all. So I got a position in this. It's a small position. Like I said, it's up over 100%. I don't attribute this to anything other than luck. I think retail and energy are the real 2 big winners in 2021. I think with retail, they do comps month to month. And when you comp now to last year, of course, everything seems to be better in 2021 than 2020. So all retail names are flying. It's not just Capri. All of them are. So I'm not really going to take credit for this one. This is just more luck. And sometimes that's what it is. You get an idea from someone, you take a small position, and things go well. And then this company here, GSX. This is a funny one. This is one of those companies. It's a Chinese company, and the whole world knows this company is a complete fraud. It's kind of indisputable. It's a fraud. So I had in early February, I told people I'm going to enter a put position, 2-month expiration for April. And on Friday, when Bill Huang blew up, he was not only supporting a bunch of companies like Viacom and Discovery. For some odd reason, he had also been talking crap to a bunch of people about how he was going to squeeze people in GSX. So as part of this unwind in his portfolio, GSX had a big unwinding as well. So yeah, I did pretty well in this company. But this is a company, it's a China company. It's kind of like Luckin, where everybody knows it's a fraud. And everyone that looks at the stock knows it's fraud. Anyone that looks at the numbers knows it's a fraud. But the one thing about Chinese companies like Luckin is that you can think it's a fraud. So you got to be really careful because these things can go on for years. And I got lucky here. But yeah, it's a Chinese fraud that's going to zero. So with that, that's kind of all I have to kind of say about my portfolio. Let me see. Do you guys have any questions? I didn't want to make this live stream go forever, but maybe I'll answer 10 minutes of questions. So if you guys type it in there. Any questions? Let me scroll up. So Palantir. Palantir was a stock I bought at $10, and within a month it got to 18. So yeah, I sold out. I thought it was like overvalued at 15 based on everything I knew, and then I just kind of hung on to it for a little bit longer. And at 18, I'm like the idiot that sold at 18. And when I sold at 18, it got up as high as I think the official intraday high was like 45. But the problem with a lot of these companies are, the management tells you, hey, we're growing, but we're growing at 30%. We're not growing at 100%. So there's really no reason for this company to trade at 80 to 1, 80 times sales. So Palantir, yeah, I think even at 22.58, it's a little high. Maybe if they have like a 50% growth, they might be at $2 billion. But even that, they're trading at 20 times sales, and they're barely profitable. I don't think they're profitable at all. So this is one of those companies where I think it's a great company. If you go look at Palantir and look at their last demo, it looks like a freaking video game. I mean, it looks awesome. It looks like a scene out of a movie. The technology looks awesome. But the problem is, a great company and a great stock price, they're not always the same thing. And this is an example of a great company and not a great stock price. So quick comment on Suro. Suro actually entered my radars again last week because Suro, Coursera is now planning to go IPO, and they're planning to go IPO at double the valuation anyone thought. So now I'm starting to think, man, Suro is one of those companies that might be worth $20 a share if Coursera goes IPO. And on top of that, they have to sell their Palantir. So with Suro, you could buy it at like 14. You might get like $6 of dividends pretty soon once they announce their Palantir. And after that, you might get a huge upside from Coursera if they go IPO. So I had that on my radar. I'm still kind of thinking about what the downsides are, but that might be coming back into play again. GameStop, no opinion on that one. I would just avoid it. I don't want to be caught up in the crossfire either way because, it's dangerous. You're gonna get. I don't know whether to short it or long it because there's so many people in that. So that one I'm staying out of. In terms of infrastructure chatter, nothing specific. I think infrastructure is going to it's going to create more inflation. I think a lot of the areas like steel, commodities, they're going to be pretty popular. And the hard part for me is trying to figure out what commodity I want to get into, right? Because, I think steel increases will help our tankers. There's people talking about silver. There's people talking about copper. There's so many different type of things that are inflationary that I think would be good. So I'm still kind of looking into that. I think if you're in quality names, you're going to get the benefit of this infrastructure chatter. It's only going to create more inflation. So you want to be in good names. And I think my portfolio is built to withstand up or down. Meet Kevin. I think some of the stuff Meet Kevin's doing is pretty risky. I think a couple of weeks ago, he had a video where he was on top of the world. He had a $20 million portfolio. And it was wonderful. But the markets are one of those things where the moment you get cocky, the moment you get confident, you just get destroyed. So Meet Kevin, I looked at his portfolio on Friday or Thursday. He had $20 million of assets, $8 million of margin. So he's just playing with fire. I mean, he was doubling down on Tesla, doubling down on Peloton, doubling down on NIO. That's pretty risky in my opinion. It wouldn't take much for his high growth stuff to drop by 50%, and then including the margins, he could be completely wiped out. So I think he's super entertaining. I love watching him to kind of see how he reacts, but trying to figure out what lines of credit from your real estate to use to buy more stocks or to prop up more stocks that are overvalued, pretty dangerous. I mean, a stock that's worth 20 and you buy at 100, just because it drops to 70 or 50 doesn't mean it's cheap. So Tesla to the moon. Got no comments on that. Copper. I agree. I think copper will be a beneficiary to EV as well as kind of in any infrastructure type bills. Gary for licensing. I think he wants to get into California, and he talked about he's mostly focusing on residential, so that not to compete with his old company Altus, but they have that new office now in Tampa Bay. So I think they're planning to come to the U.S. I live in California, and I know California is like the hardest place to do business. But yeah, I think their software with the iPads might be ahead of the game. I don't really know, but I like to see them do something in the next quarter or two, so I can kind of mirror what Gary is saying with what the company is actually doing. Let's see, Nautilus. I bought a Bowflex exercise bike last year, and that's how I came to the name Nautilus. And everything was sold out, and even now they can't get things in stock. But my problem with that company is that now I go look, it's already up like 10 times from when I first looked at it. So for me, it's hard for me to get in. So I haven't looked at it in a while. But yeah, they make the Bowflex brand and a bunch of other exercise brands. So yeah, I haven't looked at it too much, so I can't talk to you there. Silver. Let's see, silver. The problem with silver is I've been hearing about how it's a shorted commodity for the last 10 plus years. If I was picking between silver and gold, I would probably pick silver. I think silver, gold, and the Bitcoin crowd are kind of the same kind of people. I think, I've been telling people I'm not as bullish gold as I probably have been in the past because, yeah, it seems like the people that are buying Bitcoin with the same people buying gold. So, yeah, I like silver, but I think gold and silver as being kind of safe plays. If you want more leverage, I think stuff like copper will probably give you more bang for the buck because there's actually real industrial uses for that. Bio stocks, I honestly don't know too much about them. Yeah, I just to me, I've messed around with bio stocks in the past, and to me, it's hard. I just don't know the field enough, and sometimes I think a phase 3 trial is going to come out and do well. It comes out, and the stock doesn't do anything. So that's tough for me. Uranium, I like that. Uranium, I've been talking about. The problem with uranium is I feel like the same people I like oil tankers also like uranium, and both of them to me have like a wait period. So I don't like to have my whole portfolio with stocks that, yeah, I know 5 years from now are going to be awesome, but I'm just trying to make some money kind of every year or two. And uranium, I think 5 years down the line will probably do well, but I'm already waiting so long already in oil tankers. I feel like when I'm stacking uranium on top of it, it's kind of the same, not the same thesis, but same kind of time frame with uranium being a little bit longer. So I like uranium. I just have no current thought process on that right now. I'm still bullish the super cycle. I think the VLCCs haven't seen an increase, but I think we'll have to see what happens later this year. But if you know one thing, the stock price always moves before that the companies actually do well. So I'm still pretty positive on both companies like DHT and Euronav. Yeah, so let's see. So talking about the Suez Canal, I think this week will be really telling. If they cannot get that ever given out, we should see a spike in rates. So I think that will be interesting to see. I think I'm going to watch the rates pretty carefully this week just to see how that is. Uranium. So lots of stocks are at discounts. Yeah, it depends on what you consider discount. So for me, if AYR drops, I will buy more. A lot of these companies that are overvalued, the Lordstowns of the world, the ChargePoints of the world, Fubo TV, another example, they look cheap. I still wouldn't touch them. So I wouldn't consider them a discount. I think it's good to know. It's good to have an idea what a good stock price is. So when it gets there, you buy based on valuations. I was having a conversation with someone this week, and they were saying, well, how come you always bearish companies that I like? And I said, well, I'm not bearish the companies. Valuation matters to me. So then I asked him, well, what stock are you bearish? And the fact that he couldn't even name a stock he was bearish how do you know what a stock is bullish if you can't tell what stocks are bearish? So yeah, they're discounts, but I would be picky. I think the stocks that have high multiples, if they go from like 30 times sales to 20 times sales, yeah, they're at a discount, but they're still overvalued. So you got to be careful because just in the last couple of weeks, I think a lot of these retail investors talk about being long-term and having diamond hands. But what we've seen from last week is there's a lot of people making a bunch of money because S&P's at all-time highs. And then you have a bunch of people that are losing a bunch of money because you're in those stocks that are overvalued. You're going to get hit. I'm not going to comment on whether that's a secret stock or not. You can make your own judgment on that. Crypto, out of all my crypto positions, I think I made like 4 times on MicroStrategy and then I think 300% on GBTC. Right now, I don't have any holdings in crypto. If the stock price drops more, I'll likely get in. I think cryptos could be, good case scenario, a double from here. And I think a lot of other stocks have more potential to double from current prices. So right now, I don't have any position in crypto. I also think that a lot of the people that are in a lot of the speculative stuff, they're also in crypto. So if we get like a paper hand situation where people are freaking out and they're selling stuff, then it's likely that crypto will get hit along with a lot of these high flyers and tech companies getting hit. Yes, that's right. So the longer the evergreen gets stuck, the better it is for all these companies. Again, if you're long-term, probably doesn't matter too much. But yeah, I don't like to root for like a disaster to say. But yeah, if they don't get the evergreen out and a lot of us are in tanker positions, then yeah, I think it'll be good for all of us. Genius Brands, GNUS. Yes, I'm familiar with it. That was a stock that was heavily hyped and pumped by a lot of people on YouTube last year. And I almost have a rule. I spend a lot of time following people on social media and whatnot, because if I see stocks where everybody's in it, I get very cautious. And Genius is one of those companies that, yeah, they were pumped up. I think they fell quite a bit, and I think they're slowly moving up. But if I'm looking at licensing companies, I like Playboy, the company, a lot more than Genius. Yeah. I'm trying to see what else. Yeah, so stocks only go up. Well, I would say stocks only go up in the long term. So positions in SPACs, like I said, I currently have a position in Ouster. The other 2 stocks I got into was MP Materials. Early last year, I got into Playboy, and I'm currently in Ouster. Another company I've been looking into, which I don't have a position in, is a company called ASPL. It's a SPAC company. No position in it right now. But the reason I like this company is they're merging with a company that is in private aviation called Wheels Up. And this company is going to make, I think, was it $700 million of revenues? And I like this company, but right now SPACs are all crappy. But I think this is a good way to play a return to normalcy. And there's a lot of celebrities that use Wheels Up. Tom Brady uses it. I mean, it's kind of like an Uber for flights. You basically go on this app, you book a flight. It's about $2,000 per hour, and a lot of people use this now. So, kind of looking into this company. It's a SPAC company. It's got good management. It's got a lot of famous people using it. Russell Wilson uses it. Yeah, so a lot of people use this. So definitely, I like the SPAC, but I can't recommend it until I feel like I get a good price. So once it gets there, I will talk about it. But right now, I think all the SPACs are not really liked, so it's hard for me to kind of get people excited. What are my biggest conviction stocks? Yeah, I wouldn't say I have a big conviction stock. I really like all the positions I have, and they're all kind of like in different stages, right? So like the tanker play, I've held that for a year. I have long-term gains, and I feel like it's just about to take off. A company like Boxster, it's just the beginning. AYR, if things go according to plan by the end of 2022, this could be 60 just to get comparable to its peers, and then maybe 100. So those companies, I feel like they're seeds. I feel like they're just planted. And then something like Sonos, I feel like we're closer to a harvest. I'm ready to take this off the table if I find a better opportunity. But but I just can't, because I know if they win a lawsuit against Google, watch out. I mean, they can either get bought out and they can sue Amazon. And I used to do a little bit of patent consulting. And I know that Google is going to come out with the best lawyers in the world. So it's going to be a tough fight. But I think before you got these, Alexas and Google Homes and whatnot, Sonos was in connected speakers. So to me, it seems like a pretty good patent case. But yeah, I don't really know. In terms of a Discord, I do have a Discord, and for a while I was doing $3, but I think we're having a lot of people in there now, and I want to always be active in there. So I did raise prices to a low of 10. And the one thing about that is I will never bill anyone at the point they sign up. So Discord charges on the first of the month. So if you want to come in on the second of the month and cancel the last day of the month and just do that over and over again, go ahead and do that. I mean, no hard feelings at all. I mean, you can do that and you probably never have to pay. So, just, I did $3 initially just to get my first 50 people. But now we have a pretty big crowd in there. So I'm pretty active. If you talk to the people, I'm pretty active in there all the time. Some of the stuff I spoke about today in our call, I think they all already know because I've been talking about it. Like I said, if you want to come in on the second of the month, try it out for a month. If you don't like it, just cancel, or if you're low on money, just cancel and sign up again a couple days later. Yeah, that's fine with me. I don't care. Space SPACs. I feel like space is one of those things where it's a tough business. I haven't looked into it too much. I know Virgin Galactic has been there, and I've been bearish that company because space is expensive, and you got to find a way to make money. I think in those space SPACs of those names, there might be like one that's positive, but space isn't the kind of stuff that you can just sit around. I mean, you have to spend so much money, and the fact that space is so hyped now makes me think that there's not a lot of good deals in that area. But if I find one, I'll let you guys know. But for now, space is not an area I am looking heavily into. So that's about an hour. I was going to stream for about 30 minutes. So now it's been about an hour. Palantir, I spoke about already, so you can go back and hopefully find that. And last 3 minutes, I just want to say that the ARK funds I've been watching very carefully, and I know ARK, Kathy is everyone's greatest of all time, the next Warren Buffett. But my personal opinion is be very careful, because I've been getting the daily reports on outflows, and I don't care who you are. You could be Warren Buffett himself. The basic math is if you're in a situation where you have a lot of retail investors and they're pulling money and doing redemptions, you're going to be in trouble, and there's no way around that. So I've been watching to see what ARK's been doing, and ARK has been selling all of their good names. They've been selling, like Facebook. That is one of the best large cap companies. I would not sell Facebook, but ARK is selling Facebook to buy a workhorse. Okay, so to me, that tells me that they're having a liquidity crisis. I had puts on Tesla 3 times, and I made pretty good money in twice. But it's a dangerous stock to short because of how much people love it. It's a cult stock. The 2 times I shorted was the first time was shorting right after they made their BTC announcement. And then the second short was recently. I forgot what the reason was. There's another reason why I got into it. So both times I've done well on that. And ARK, I've shorted through puts twice and done pretty well. But again, they're very risky stocks to short. Be really careful. I have no position in either one right now, but be very careful. But like I said, if you have 5 or 10% ARK, go for it. But I would say that, watch those daily patterns. You can sign up for her daily newsletter, and she's selling her good names. She's selling her Googles, her Amazons, her Apples, and she's buying Workhorse. She's buying VUXI. She's buying a lot of stocks that are not very good. So what happens is, here's a funny thing. Okay, so I got this portfolio here. I'll show you guys. I got this portfolio here. It's called the ARK Illiquid Fund. So these are the companies that ARK owns more than 10% of. Okay, so what that means is that she owns more than 10% of these companies. So she pretty much cannot liquidate these companies or else she's gonna be in trouble. So I just watch this and I just kind of laugh a lot. But be careful with shorting these companies because what happens is as she sells her big names, she will continue to buy her illiquid names to make herself more and more illiquid. So to me, that's really dangerous. So at some point, she's not going to have any more Google, any more Facebook to sell. And all she's going to have is bigger and bigger positions of these type of companies. So keep that in mind. Like I said, yeah, maybe she's the GOAT. Who knows? But just be careful if you're long anything on Kathy's list. Yeah, my other problem with Kathy is she's not the youngest person in the world. I think she's 65. And if you look at Kathy, she's had basically about a good 9-month run in her career from March to December. In 2021, she's down like 15-20%. And the other funny thing is, if you guys want to see, is if you go map ARK K, which is her flagship fund, and you compare this to, is it TQQQ? TQQQ. So this is a triple leveraged NASDAQ fund. So if you just graph this, you can argue that Kathy is great, but then at the same time, her portfolio is practically mirroring the S&P, the NASDAQ triple leverage. I mean, it's identical. In fact, I would even argue that, the TQQQ, the triple NASDAQ, is actually outperforming Kathy's funds. And you don't even have that risk, that concentration risk. So, the thing with Kathy is, they say damaged animals can get very dangerous. So that's why you got to be really careful when you short ARK. But yeah, I think they're in the world of hurt. Maybe I'm wrong, but we'll see. And when I see this chart here, it kind of proves to me that she's not really picking any stocks better than anyone else. There's also a Goldman Sachs non-profitable index, which is Goldman Sachs as an index of companies that are not profitable. And if you map the non-profitable index, which are companies that are non-profitable, to Kathy's funds, they also mirror each other. So to me, that's also not a good sign. And yeah, so even with Tesla, Michael Burry thinks it's a $100 stock, and Tesla and Kathy thinks it's 4,000. So I think we'll have to see what happens. But I'm a big fan of Michael Burry. I like the way he thinks. So yeah, I think that's going to be it for this live feed. Maybe I'll do one again in a couple weeks. But thank you guys for listening, and I'll see you guys soon. All right. Bye, guys.